Okay, cool. Ish, and they're talking about your ascending structures, dude. Talking about your ascending structures. There's one on USD. But anyway, so let's get into some Fibonacci, guys. Let's get into some Fibonacci. So when it comes to Fibonacci, let me get my Fibonacci tool here. So this is what my Fibonacci currently looks like, because that's all I need on my Fibonacci. But I'll just go into the settings, and then while I'm in the settings, I'll also be showing you, Cat, how to basically switch on or switch off or whatever the case is. So just double tap on your Fibonacci tool in your trading view. And then obviously you'll see all of the different, what you call it. You don't have to extend right if you don't want to. But nonetheless, let's just do this quickly. We'll put the levels on just so that we know where. And then all I'm doing is that if, for example, you don't have 0.382, you're just going to obviously type it in here. What's the Fibonacci extension that you want? Like, for example, if you guys can see here on my left, we still have 0.382. But for example, maybe if I put 0.157 and I pressed OK, you would see that now my Fibonacci is calculating where's the 0.157 retracement area of this move to the downside. So that's just the settings. That's just the settings. Let's just put it back on the 0.382. So all you're basically just going to do is you're just switching them on. Which ones do you want to have on your charts? And then even in terms of extensions as well. So you guys will see here on the right, we have our extensions. So anything above 1 is going to be an extension. So important key levels, I guess, just for extensions is your 127 and your 161.8. So if you don't have them, like the 127, then you'll just obviously switch on. I can even literally switch this 0.9 and turn it into, let's just put it as 1.30 instead of 27. And you will see that even afterwards, I'll have that 1.30 level marked in there. So if you don't have the exact level that you want, then you're just going to type it in your settings and you'll get that level that you wanted. 0. Okay, cool. I just wanted the way I had it because I used to use all of these areas for certain reasons. But anyway, when we're talking about Fibonacci, guys, the most important levels when we're speaking about the retracement. So let's just close this settings window and we'll move this thing like this. So the most important areas or the most important, I guess, retracement areas, let's just say, for example, let's just draw some structure in here and just say maybe market is moving up. And then obviously we're going to expect a retracement somewhere, and then we're going to expect maybe some continuation. So what we'll just do is when we're using our Fibonacci tool, all we're doing is for Fibonacci retracements, we're expecting a correction. And the only reason why we're using a Fibonacci retracement is to see where can we enter. When the market starts retracing, where can we jump in? And so the levels that you guys are taught to obviously highlight is most importantly, the 0.382, which is when a market is retracing. After we've seen that impulsive move to the upside and we're seeing this market start to retrace, the 0.382 is the first level of structure that the market comes into first, or any retracement we expect it to retrace at least to the 0.382 first. Now, we also know that 50% and the 0.618, or rather in between 50% and 0.618, or 618 is the exact golden ratio. But if the market terminates anywhere in between the 50% and the 0.618, that's still a good area for us to be looking for, I guess, termination of this corrective structure. So that's all our retracements are. After our impulse, we're just measuring, we slap on our Fibonacci to find an area. Fibonacci is not there to tell you to jump in, to tell you to close, to tell you to whatever. Fibonacci is there to highlight zones, points of interest for you. You deciding what are you going to do with those zones. Are you going to use those zones as points of interest for entries, or are you going to use those zones for points of interest for targets? So we use Fibonacci retracements to obviously calculate our retracement. Once our retracement has obviously formed, we want to see where can this corrective structure, this push to the downside, where can it finish? If we do get the continuation out of this correction, where can it end? Now, that's where we use our Fibonacci extensions. So first Fibonacci extension that we expect any impulsive move to go to to extend to is the 127 extension. So it's kind of, I guess, just other Fibonacci ratios and whatever, but extensions are basically there for us to calculate, once we have our corrective structure, where can we expect the market to go and terminate? Where can we expect the market to stop or to find the next set of resistance according to Fibonacci? So 127 is obviously the first area that we need to look at, and then obviously your 1.618. So I just added some extra stuff there for you, but I know your question was more on how you, more relating to the settings and how you're going to add these levels. So hopefully, how are we with that, Cat?
Oh, now I get it. So the most important case on the Fibonacci is 38.2%, right? And 68 and 70, 61.8 and 78.6. And
You can think about it like, yes, the 0.382, 50%, 61.8 and 78.6 are the four important ones in the ratio. But I guess for trading and for simplicity's sake, what I would say is that just focus on one or two. Like, for example, for your retracements, just pick one or two where you expect your retracements to terminate, and then kind of backtest that. Because if you're going to use all of them, it's going to be very difficult, because a market can come to 0.382 or whatever at the retracement thing and just show a small reaction, and then you're jumping in. Meantime, market is still going to push down and go to the 0.618 or a deeper level. So what I'd say is that just pick one important one that you want to use for yourself. Don't use them all. Pick one or two for your retracements, which area, or when market is retracing. Like if you saw how my Fibonacci was before, my Fibonacci only had one. Okay, I can't go back beyond this. Now I must change. There's it. My Fibonacci literally only has one area, and that's the 50%. And that's for me, when I use Fibonacci, I only look at the 50% Fibonacci retracement area. And that's what's relevant to me. That's what's there. That's all I need on my charts. So I think even for yourself, just to minimize the clutter and make things a lot simpler, and avoid looking at the 0.382 and saying market is doing this there and whatever, just pick a few and then just use those few. As well as for your extensions, you can see I only have two extensions that I use, the 127 and the 161.8. So even for those extensions, just pick one or pick two that you're going to use, like maybe for your TP1, your TP2, those types of things, but refine it as much as you can. And then obviously backtest what you've refined. Because if you're going to use them all, think about how you're going to backtest them all. It's going to be very difficult. So as well as if you can't backtest them all, then it means you won't be able to trade them all for sure. So then you also want to just kind of minimize and clear things out. Make your working space as simple and as easy as possible.
So the Fibonacci extensions, we can also use it as a risk to reward ratio.
True. Yeah, to calculate for some nice risk to reward ratio. But obviously your risk to reward ratio is more defined by your stop loss size. It's not really defined by where your target is, because my target can be here in the same place. Like I'm not going to move my target. Let's just say my target is there. You can see my risk to reward ratio on this trade is 5.36. But if my stop loss range is a little bit bigger, you can see how my risk to reward ratio drops the bigger my stop loss size becomes. So your risk to reward ratio is directly dependent on what your risk is. It's how much you are risking versus how much you are making. Yes, if Fibonacci, or if the Fibonacci extensions give you a better risk to reward ratio in terms of maybe pushing your targets further, then you can definitely use those. 100%, I think, yeah.
Okay. Yeah.
All right. Awesome. I think we'll go on to something from Jose. And Jose, and another thing, guys, I like to tell the guys, like every session that I have, one-on-one session that I have, I like to explain things using more of like illustrations and theory. And the reason why I like to do this, and kind of maybe not so much want to come here and show you something on this chart, is because that the way that these charts are going to give us these things are going to be slightly different, because these are all beautiful young ladies, all USD, ZAR, AUD, CHF, they're all their own individual ladies. And you know that as much as we can say that every woman has mood swings and every woman gets cross and does this and does that and they're happy and we know chocolate makes them happy, but the way that each individual pair will respond to something will be different. So it's always better, or at least I think it's better for me to rather go over the theory so that you can understand the reasons why, but the way that the chart will give it to you might not always look the same. So let's go into Jose's question about the US30 strategy. Dude, what were you specific to when you said something about the US30 strategy? You were talking about support and resistance and as well as what else?
Now, yeah, I can identify the support and the resistance, nah?
Mm-hmm.
But when I first read and it seems like I'm always get caught on the wrong side. It's either I entered too early or too late or something like that.
Okay, so I think Mamba is probably the best person to explain the 1530 strategy, because I think now your question is that you're fine with the strategy, but when it comes to 3:30, something is off somewhere. Though,
Yeah, something. And
mhm.
like continuation patterns, not all of them so far. Like I've worked out, not most of them doesn't give the third touch now. Like if it doesn't give a third touch, are you still supposed to continue with the trade or not?
Very interesting question, dude. Too interesting. I love this question a hell of a lot, because there's a time that I made a YouTube video on this exact same topic. But anyway, we'll get to that. Though I think to just sum up what Mamba's 1530 strategy is, I don't think I can be the right person to go deeply into it, but I can sum it up for you. So basically, what Mamba's doing is that he's looking for support and resistance, right? So market is doing whatever it's doing, but at 1530, there's going to be the closest resistance and probably, let's just say, maybe the closest support at 1530. And he's looking for this support and resistance mainly from a 15-minute and a 5-minute perspective. So he's looking at the 15-minute and observing, okay, cool. We had some structure here on a 15-minute. Do we have the same structure? Is the structure still valid on a 5-minute? Or on a 5-minute, are there a whole lot of small levels of structure in between, or whatever the case is? But Mamba's highlighting 15-minute structure and 5-minute structure. What he's doing now at 1530 is he's just looking for that. There's that 5-minute candlestick. He's looking at the 5-minute for entries at 1530. That candlestick that started at 1525 closes at exactly 3:30. Now that candlestick, what Mamba's looking to is where is this candlestick? Is this candlestick close to some resistance or close to some support? Now, if the candlestick, maybe for example, let's just say is at the support, what he's looking at is he's looking at, does this candlestick manage to break below the support structure, or does this candlestick fail to break below the support structure and then obviously maybe give some sort of a weak rejection? This is that 1525 candlestick. That candlestick just before the half past mark. So that candlestick is then giving him information on which direction he should enter based off, is it able to break a resistance or a support level or not? For example, if it's not able to break this support structure here, then obviously Mamba is buying at 1530. Regardless of how this next candlestick pushes down or whatever the case is, he has a predetermined stop, he has predetermined targets, or at least maybe he's looking to risk a certain amount and he's looking to make a certain amount, or whatever the case is. But nonetheless, this candlestick, this 1525 candlestick, is the candlestick that's basically telling him whether he should buy or sell. Obviously, if this candlestick had then closed below our support or broke and closed below the support, then what he would be doing is then entering a sell position. Why? Because momentum managed to push below our support structure that had been holding in the past. So that's all basically he's looking for at 1530. Yes, identify those support and resistance areas on a 15 and on a 5 the exact same way. But in terms of entries, he's entering off that 1525 5-minute candlestick. If that candlestick fails to break a resistance area, for example, closes below, then he's obviously selling. Why? Because it failed to break above this resistance area. Yes, you know that at 1530, sometimes maybe market can wick up and come and test the previous resistance area over here and maybe just leave this one. But nonetheless, this candlestick here that formed just before is the candlestick that's telling him which direction to go. If it does manage to break this resistance area and close above, then Mamba's buying. Stops away, somewhere below structure, or maybe he's looking to risk a certain amount. So I think I was just enlightening you on what his process exactly is for 3:30, because at 3:30, remember, you want to jump in at 3:30. If you're going to wait for that 5-minute candlestick to close or to tell you to jump in from 3:30, then that means you're getting in 5 minutes late, you see.
So T.Mayne, what if on the 5-minute time frame, all his analysis are giving him a buy signal, and when he moves to a 1 hour or 4 hour time frame, the structure is showing a sell?
So
or
nice question.
To a sell.
He doesn't look at structure at all. His eyes are not worried about whether price was creating a descending nature or what. His eyes are not looking at that. All he's worried about is what is price doing right now to the levels of structure that we are closest to. The closest support and resistance to current price action on a 5-minute, that's what's guiding him. He's not looking at structure, he's not looking at anything else. No patterns.
Also, meaning that this strategy is only for, like, you can only hold maybe, let's say, 15 minutes. And
no, you can hold indefinitely. You can hold indefinitely. Obviously, maybe if you observed a descending structure and then obviously maybe the signal gave you a buy, you then have the confluence behind you of your technical analysis to know that you can maximize on this trade until the 90% rule or something of that nature. But the way that this strategy is obviously set up is for the purpose of scalping, to jump in and out of the market. But there are times, man, where holding that 3:30 trade can pay. There are times, yeah.
Oh, okay. Yeah, I saw it on Tuesday. Both the 15 minutes time frame structure and the 1 hour structure were aligned.
Yeah,
and holding was very, very good.
You see, and then sometimes maybe the signal might give an opposite direction or whatever, and you find that we in, we out, and then price reverses as fuck after that.
Yeah. Okay.
Yeah, but like any other strategy, you guys can see that there's no 100% win rate. So obviously you're just playing against probabilities and statistics. All your job is just to execute this process over and over and over, regardless. And you know that over a period of time, you're going to be up. I see. Let me just double check what's the time. Okay, we're cool. We still have like about a half an hour. So I wanted to speak about this break and retest. Yeah, the break and the retest stuff. So with break and retest, what you made us highlight is you made us highlight the concept of false breakouts. So let me just delete all of this stuff here, and then we can even start drawing from here. It's fine. So basically, you want to know how to trade a break and a retest, and also let's take into account these false breakouts where maybe, for example, price does give a resistance, we break above this resistance, and then where you're looking for that move to the upside, price just does something like this, and you are caught basically with a false breakout, and price even gave you a nice bullish engulfing right here, but meantime it was just going to come back into structure. So there's a couple of things that I kind of want to just highlight, is that when you're caught in, for example, a false breakout, that means that you're looking at price action on your entry time frame, and you've executed, because your entry time frame, maybe your 15-minute, let's just add some structure to what we're saying, and we're going to just say, for example, we analyze for our directional bias on the 4 hour. We look for our levels of structure on the 1 hour, and then we look for our entry confirmations on the 15-minute. So we're just adding some structure to what we're saying. Now we're looking at the 15-minute. The 15-minute has given us a reason to buy in this area somewhere here. Now, what we're doing is we can't really anticipate a false breakout or something of the like. If, for example, our 1 hour structure, let's just say that this is 1 hour resistance that we've broken above, and we are retesting this 1 hour resistance, and we find that entry on a 15-minute. 1 hour structure to us is still bullish, because we still may be creating those higher highs and higher lows. And this is previous resistance that can function as support. Though what helps is understanding where you are within the market. So would you want to take, for example, let's just say we have this market that's moving to the upside, something like this, and we've just broken above this resistance area over here. Would you maybe want to take this buy of this retest of this level of structure? Maybe I wouldn't be looking for that. Why? Because when we go up to our higher time frames, like maybe the 1 hour, and we observe the overall nature of price, the whole what price is doing and where we are within the market, sometimes you might find out that where you're trading and getting into this nice bullish trend is literally just at the top of, or at the third touch of, some sort of ascending structure, or whatever the case is. So that's why I want us to highlight maybe not so much focusing on our entries and those types of things, but I really want us to just look at maybe, let's just say, two main things: where we are within the market, like where is price right now relative to where it was, where we are, and what is price doing. And if you've heard, like during the morning live sessions and all of those things, like when I'm talking about, maybe for example, we can use USD ZAR, since we're on USD ZAR. Maybe for example, we're on a 4 hour and USD ZARs, let's just say somewhere here. Let's just say USD ZARs somewhere here. And you'll see me say that from a 4 hour, all we're waiting for is for price to come into maybe this area, this third touch area. And once we get into this area, price will tell us whether we should be looking for a risk entry or a reduced risk entry. And also, price will give us an indication as to what is price doing at this area. So we're always focusing on two things: how price is going to a specific area, and then what price is doing at that area when it gets to that place where we want to trade. And so even when we're doing analysis, we're paying attention to kind of, we can say it's the same two things, as to where is the market and what is the market doing where it is. So maybe we can say, like, yes, you can try and find a buy or whatever the case is in this area here, expecting maybe a break and a retest, because I mean, it's just been that first move to the upside. But once we break this second structure or something like of that nature, then now you know that this trend is in. And if I'm jumping in on this trend, especially if I can isolate an ascending structure, then I'm probably jumping in very late. And maybe if I looked at the higher time frame analysis, I would see something different. I would see maybe have added confluence factors of price violating some support structures over there, giving me a sign of weakness. Because if we're bullish, remember we're on a 4 hour, if we're higher time frame bullish, we shouldn't be seeing support structures being broken. We should be seeing higher highs and higher lows, which means each higher low should be protected. Price shouldn't be going below. So we're then able to see, just by looking at the overall higher time frame bias, we understand where we are within the market and what is price doing. Is price giving us more bearish momentum higher time frame, or is price giving bullish momentum higher time frame? If we can see that the momentum is bearish higher time frame, that means that the longer a bullish trend is happening, the less we want to get in on this trend, because that means that we can clearly see that maybe momentum is to the downside and momentum is not pushing to the upside as we're expecting. So let's just jump back. Let's just cancel this. I just want to jump back to our illustration here and our structure. Is that we'll never really be able to anticipate a false breakout. But what we can always do for ourselves is observe the two things: where is price and what is price doing? And you'll probably find out that maybe if you went on a slightly higher time frame, maybe 15-minute is your entry time frame, you're at this area, nice break and retest or whatever the case is, but you'll find that maybe this push to the upside that gave you a nice bullish engulfing candlestick on a 15-minute, when you go to the 1 hour candlestick, you'll find that it's something that looks like this at support. Something that looks like this, where your bullish engulfing candlestick was just a pin to the upside. And meantime, it looks like a bearish pin bar, so still showing maybe some bearish momentum or something of the like. So I guess what I would help you with, and in terms of like false breakouts, is you really just want to see where you are within the market. If your trend is overextended, if this market has been trending for a very long time, then where you should have been in the trade is probably done. It's probably done. So also, I guess I would also be paying attention to where is our closest higher time frame resistance. So if price is kind of, I would say, far away from higher time frame resistance, like let's just say maybe we have some resistance from the past up there. If price is still far away from this higher time frame resistance, then I will take this trade every time. But if price, maybe this ascending structure that we have, that we've identified, that gave us that false breakout, is somewhere close to resistance, then it makes a lot less sense for me to look for buys, as much as it's a break and a retest, but we're at resistance on a higher time frame. And so as traders, we always want to trade higher time frame structure. The reason why we drop down maybe on a 15-minute is to just find an entry. That's why we always say that we need 3 time frames that we're looking for information. We want a high time frame where we look which direction we want to trade. We want a middle time frame where we look at the important key areas. Like, for example, maybe if our higher time frame structure is bullish, our 4 hours bullish. On the 1 hour, what we want to do is we want to observe which is our middle time frame. We want to observe those important key areas where we want to trade. So we already know, okay, 4 hours bullish, we want to go up. Now from the 1 hour, which important levels of structure can I use to be able to trade in that higher time frame directional bias? Once I find this area, the only reason I'm going down to the 15-minute is when price is here, and the only reason is to actually enter into the market, because I can't enter maybe on a 4 hour or 1 hour because my stop loss is going to be kind of big. So what I'm doing by dropping down to the 15-minute is because I want to refine my stop loss. I want structure to give me something, I don't know, whatever it is, maybe an inverse head and shoulders here at this previous support that has now turned resistance. And if price gives something like this, instead of me trading that 4 hour candlestick, which would have probably closed somewhere up here, and my stop loss would still have to be below here. Now I know that I can refine and go down on that smaller time frame, enter a lot earlier, the stop loss at the exact same price, and then obviously increase my risk reward ratio now because I've dropped down the time frames and I've refined my entry. So break and retest, dude, is that you're just going to have to execute them whenever you see them. If that's how you trade, especially, what I would say is that really break and retest really are profitable when markets are trending. When you have a nice direction, a nice trending move, then you're going to be trading those break and retests. Break and retests also function if you see these chart patterns that we trade, like maybe, for example, double tops. They have a break and a retest in them where the market breaks the neckline and obviously retest that neckline. Head and shoulders also has the same thing where the market breaks the neckline and retest that neckline. Where are you looking for this double top? You're looking for a double top at resistance. So you'd also be looking, for example, your break and your retest. Maybe if you're looking for bearish continuation and you don't see a double top, maybe we're at, let's just move this down a bit, or let's just do this. Let me just delete all of this crap here so that we can have a nice clear charts. Okay. Cool. Let's get this drawing tool. So let's just say, for example, maybe price was coming down to the support structure where you want to trade. Now, price doesn't give you a double bottom. It doesn't give you an inverse head and shoulder. But maybe on that 15-minute, you see something like this, a resistance being formed, and then obviously price breaking this resistance. What is this to you on a 15-minute? This to you on a 15-minute is the beginning of an uptrend. Where are we? We're at support. So the context of this market makes sense for me to look for a break and a retest, as much as, yes, maybe I didn't get that double bottom structure or that whatever, but I'm at support. So the context of this market, higher time frame, allows me to trade maybe that break and that retest without a level of structure. Or maybe we're at support and price has been consolidating for a very long time. From this consolidation, what price has given me is an important resistance and an important support area. Am I looking to sell? No, because I know we're at higher time frame support. So no matter what happens, whether price does this, I know I'm not going to sell because we're at support. If price breaks back into structure, what do we have here? We have a break and a retest of this support structure here that prices broke below. If price pushes above here, what do we have? We have a break and a retest of this resistance of our corrective structure. So what matters more is our higher time frame directional bias. We already know from the higher time frames which direction am I looking to trade. The middle time frame is telling me where am I looking for this trade to trade that higher time frame directional bias that I saw. The smallest time frame, which is our entry time frames, is just telling us or giving us a reason to jump into this trade and also helping us refine our stop loss. So I guess, yeah, false breakouts, man, there's no way to run away from them. You have to just execute your process over and over, execute your process consistently. But what I would say is just add your higher time frame context to your entries, and that will help you stay out of a lot of false breakouts where you're buying. Yes, the trend is going up, but there's some other higher time frame resistance there that you're buying into. And obviously, maybe because we're at higher time frame resistance, maybe that break and retest is going to turn into something like a nice left shoulder ahead and then a right shoulder for a reversal. And you didn't know because you didn't watch the higher time frames to see that, oh, prices at a higher time frame resistance area. So maybe I shouldn't be looking for continuations, but I should be looking for reversals. So I would just say that add higher time frame context to your situation on false breakouts, man. And then I guess you'll have some good direction, dude. How are you on that, dude?
I'm fine. I did hear you. Guess add something to me. Of which, tell me, like on the 15 minutes we are executing our trade. Yeah?
Mm-hmm.
Yes. Okay. So as much as I heard you last time saying that you should find which kind of a trader are you.
Yeah.
Like I really, and what kills me is that when I swing trade, I'm kind of being impatient. But when I day trade, I feel like I'm enjoying day trading, you know, executing a trade and closing it. I don't like to hold trades for long. I don't know. That's how I am. Because of I can see even when you have sent a signal, then I would say I would leave it like that. But obviously, I'm trying to monitor the trade.
And then you end up closing and doing funny things along the way.
Yeah.
I think what I would say is that myself, right? You can see I send a lot of swing trades, trades. And if I show you this swing trade that we took on AUD-CHF, that I think it stopped us out for just above 1%. And yeah, I'm looking to jump in again, guys. I'm gonna look to jump in. We'll just see if it gives us another entry. Let me just do this here. Short position there. If you guys can see this position here, I entered on my own and we hit. I hit TP very nicely. Nice stop loss size, nice whatever. This to me, any stop loss size to me that is less than 15 pips for me is either a scalp or a day trade. And so yes, I do scalp and day trade, but if you look at the actual position that we took, which is this position, it's a swing trade. So even when I'm scalping, even when I'm day trading, even no matter what I'm doing, I still want to trade at higher time frame areas. So if I'm going to trade, for example, if I'm going to enter on a 1 minute at higher time frame resistance, let's just go back to USD ZAR and we'll make an example that's going to give you guys a little bit of FOMO, but please don't get FOMO, guys. But it's setting up. It's looking very nice. Actually, I so badly want to sell USD ZAR, guys. Maybe I might even take this 4 hour bearish pin, but we'll see. Anyway, so let's just say, for example, you're a scalper and you're trading still based off higher time frame structure. So higher time frame structure would mean that this 4 hour resistance trend line is the resistance trend line that you want to jump into. Let's just say you scalp this trade and you jump into this scalp over here. You jump into that scalp, I don't know, with whatever stop loss size, and maybe your target is this low or whatever the case is, because maybe on a 1 minute, this is a nice, big, important lower structure and it's already 5% risk to reward ratio. If you're going to jump in at higher time frame resistance anyway, wouldn't it be better and wouldn't you maximize more, make more money if you turn this scalp that you are looking to target there into a swing trade? And so that's kind of my philosophy, is that I don't care what I'm doing, whether I'm scalping, whether I'm day trading, whether I'm whatever, I'm still going to execute at higher time frame support and resistance. Why? Because there's a bigger opportunity for me to maximize on that win. If this trade wins, if it runs based off that higher time frame momentum, I'm going to make a lot more than if I was just scalping and I entered stop loss 15 pips and I'm done for the day or whatever the case is. So I'm looking at this, or rather the way that I trade is very long-term fixed. I don't want to be in now and out now and whatever the case is. Yes, you can do that. You can make a lot of money. But I feel like the way that you really make a lot of money is through patience, holding those trades. The longer you hold, if it's going in your direction, the more money that you're going to make. And so if you can turn a scalp, something with a 9 pip stop loss, into a swing trade, you'll make so much more risk to reward ratio than you would have made if you're just targeting a 1:3 with 9 pips and you're a scalper or you're a day trader. So for me, it doesn't really matter. Like if you look at my processes, I consider myself a swing trader. I analyze on the daily, which is where I get my directional bias from. I use the 4-hour for my levels of structure, for my important support and resistance areas. Like you can see, every analysis that I do is mainly on the 4-hour, where we observe our trend lines, our structure, support and resistance areas where we want to trade. It's mostly on the 4-hour. So I use my 4-hour for my levels of structure, for my zones where I want to trade. And then I only drop down onto the 1-hour. Like you see our AUD CHF position that we took, I executed on the 1-hour. This was also on the 1-hour, but I'm sure there's other trades that I've sent, other signals that I've sent where we've executed on a 15-minute and maybe even sometimes on a 5-minute. But even those trades where we execute on a 15-minute and a 5-minute, we try and swing them and we trade them where at our middle time frame support and resistance areas, or middle time frame important keys areas. Why? Because if that higher time frame momentum does come in, then we make a lot more than just looking for a small pullback saying that I'm a scalper. Yes, market is trending up, but I only want to catch this one candlestick to the downside. You'll only make that one candlestick. But if you were bullish as a scalper and you decided to hold maybe from wherever, you'd make a lot more because you're in a long-term higher time frame bullish trend. I even forgot what our question was. But how are you, Kagiso? Are you cool?
I'm cool. I'm cool.
Awesome,
I do understand. Yeah, I kind of feel like even swing trading some other pairs, there is not a problem as much as I do see the direction of the chart and understanding that okay, it's moving on my direction. I don't have a problem with swing trading the trade, but I don't want to hold a trade for more than a day, maybe, or 2 days. It kind of irritates me because of I can see I'm on profit. Suddenly it's dropping again. You know, I'm becoming impatient when it comes to that point.
I can solve your problem by giving you one thing to add into your processes, or rather, let's just say one thing to take out of your process. And I think from this day forward, you can pull out exiting your trade on your own. See that thing of when you close on your own, or when you do something, when you close that position on your own, if you cut that one thing, just that one thing out of your processes, man, it's going to put so much more discipline into your processes, because now how else are you going to go out of this position? Stop loss or take profit. Your take profit is obviously predetermined. It's there. Your stop loss, you can trail it. So now all you need to work on is, once you've entered that trade, all you need to be thinking about is, how am I going to trail my stop loss on this position? It's how you're going to manage this position. Where am I going to, if I'm going to partial out, where am I going to partial out? And that will allow you to hold for a lot longer. Like if I think that the longest we held a trade for, I think one of our trades, I think the longest we ever held for was almost a week. I think it was like maybe 4 or 5 days or something like that. But even a trade that we hold for 4 and 5 days, if I tell myself that I'm gonna only trail the stop, or I'm only gonna trail my stop loss according to structure. So maybe as structure starts to develop, and then I'm gonna start trailing my stop loss. Once I see lower lows being broken, then I'm trailing stops above these swing highs, or whatever the case is. If I'm doing something like that, then there's no room for me to feel. I can see P and I can see profit going up, profit going down, like CHF JPY. I don't know if you took that signal, guys. I don't know if you're in that trade, but that trade literally just tagged us in, guys. Just tagged us in and went straight into a drawdown from yesterday. It's been minus. Did I even look at it once? No. I don't look at the I don't go to my MT4. I'm not looking at the numbers. The numbers are not there for me to make a decision. The numbers shouldn't cause you to make any decision. Open, close, do this, do that. Numbers shouldn't be the reason why you're making a decision. Where are my eyes? My eyes are on my trading view. My eyes are on the structure, because the structure should be the only thing that warrants me to make a decision based off whatever it is. What I think, what I feel should never be a reason for me to touch anything or make any decision. Only what I see happening objectively on the chart is a reason for me to act or to make a decision on my trading account or on my position.
Okay, I do understand.
100%, man. We're just taking out one thing, the freedom of manually closing that position. Pull that out of your process.
Okay. But though, if I could manage it, like maybe put in doing my stop loss to break even, would it still be okay so that I could at least close up some portion
That's
of my
fine. That's 100%. That's the management that I'm talking about. I want you to know that I'm only gonna leave this position either by stop loss or by take profit. Those are the only two reasons why I'm going to exit this position. And once you start trading like that, you start to you develop another kind of patience, man. You develop another kind of patience because you know that you can't do anything when market is going up, market is going down. You can't do anything. You're just along for the ride. All you there to do is just make sure that whatever this ride is as managed as possible. Yes, you have no control over which direction it's going, but you have control over how you respond to wherever the market is going to take you. And that's what you want to take control of. You want to take control over what you can control. And you can control the way you respond to what the market is doing. You can't control what the market is doing.
Okay.
100%.
I wanted to ask
mm-hmm.
if maybe, let me say, maybe I want a system. Maybe is it okay to get a system, something that would make me comfortable when I trade with it? Maybe like not on like, as I'm saying, like a system, as much as you said last time,
mm-hmm.
you should know what kind of a trader are you and get a system that fits your trading style.
Mm-hmm.
Is it okay?
100%, dude. You see this trend line that's on the chart? You can think about this as my AI. It's my system that helps me make decisions. If I would say that if you're going to add something to your trading that is going to make your process of decision making simpler, then definitely do it. But if it's going to make your process of decision making more complicated, then don't do it. Because if you see how maybe, for example, how a quant fund operates on they have systems. But the point is that every system is not just left on its own to run and buy and sell and do whatever. At the end of the day, there's a human being that is looking at the chart that is saying that, okay, cool, this system is giving me a sell signal based off whatever the case is. Does this make sense with my risk management? If it does, then yes, I will allow this system to execute this position. It's still there's still someone involved. Don't ever get this thing of that it's all 100% automated. 100% automated is dangerous. Where humans are not involved is very dangerous because computer can't see that, okay, the market is correcting up. Computer just looks at numbers and data and analyzes data. It can't objectively see and identify a change in the nature of the market or the nature of the price action. So point being that, yes, dude, you can get a system. You can get whatever, add whatever. Like Fibonacci is a tool. Trend lines is a tool. A system that's going to tell you when to buy or when to sell is also a tool that can simplify your process. It's just up to you as an individual. And also, where do you see yourself? If this is a career, then obviously you can't use a system because the system is not going to tell you things like, okay, market makers are busy now, or this is happening, or nature's changing. The system is just going to tell you buy and sell. The system is just for you to make money. But if you're planning on making this a career, then you really honestly need to understand and be competent within the market space. And so that way is not helpful long term.
Okay. Based on a long-term process.
Mm-hmm.
Okay.
So T.Mayne,
yeah,
because you're approaching December holidays, will the market change?
Definitely,
like maybe
dude.
Become more volatile?
Definitely. Like it's starting this month. September's the month. September's that month where the shit is hitting the fan, guys. Starting this month. I think I don't know. I wouldn't say more volatility, but definitely the nature of price action does change every quarter based off seasons, based off whatever, all of those nice things. It definitely does change. But in terms of your processes and the way that you're going to do things, I don't think anything should change about how you are going to do things. Maybe you should just be observing that, okay, cool. I used to trade AUD, NZD, and I used to hold for about a week or whatever the case is. And now that same type of trade with the same take profit or whatever, and now I'm holding for 3 days. So which means that there's more volatility. The candlesticks are bigger. This is bigger. So I guess you're just observing the changes for yourself to see how you're going to manage your positions. But in terms of your process of what are you looking at, what's going to make you enter this position, where are you entering, the concepts that you use, structure, support and resistance, none of that should change. It's just how you're going to manage your position based off how the nature of price action has changed.
So it is still safe to trade.
It's still safe to trade, man. Still safe to trade. I can tell you guys, like, if I find a nice entry on the 22nd of December, I'm gonna take that entry, because that's the statistics. If you have never back tested that something doesn't work for you, then how do you know that it doesn't work for you? If you have the statistics behind you and you've said, I've back tested for 7 years straight, every December, this strategy that I'm trading doesn't work, or when I find setups during this period of time, it doesn't work. Only then can you then account for that in your forward testing, because your back testing should be exactly how your forward testing is. If you're doing something in live markets, then it should have been something that you've back tested. If you don't trade Mondays, did you back test not to trade on Mondays? If you haven't, then you don't know. Maybe you're even killing your own statistics. Maybe the strategy that you're trading functions best on a Monday, but you're just hearing other people saying that, no, Mondays like this, Mondays like that. If it's not back tested, don't do it.
Okay. I get you, man.
Mm-hmm.
Thank you.
No stress, man. Ish, guys, I think we did have, I seriously wanted to touch on, especially the continuation thing. So let me try and do that quickly, because we have like a couple of minutes left. So let me try and touch on this continuation. I think it was from Jose. I don't know if Jose is still here. Is Jose still here? I doubt. I think, let's see. Yeah, I think Jose left. But he really did ask a very nice, deep as fuck question. And his question was like, if we have like this some type of continuation, and maybe we only have something like this, and then we find out that market continues without giving us, if we were to isolate the structure like something like this, you'd find out that, yes, market has pushed up before it actually gave that touch that we're probably waiting for. And very valid question, guys. Very valid question. Now, I know I don't have enough time to explain this whole concept, but go on my YouTube channel. You guys are going to see it there. This exact same thing. There's two types of there's a continuation structure that I look for, or let's just say nature. We know that we can call this a flag, we can call it a horizontal correction, whatever, rectangle, all these names. But nonetheless, the nature of what happens in these structures, if it's an upside continuation, it's going to be exactly the same every single time. What's going to happen is you're going to have one low established, one support area here. What you are waiting for as a trader, if you're trading that continuation, you've got yourself this nice impulsive move, and this is your move or your preparation for you wanting to jump into the continuation structure. All you're doing is just waiting for one support. Once you have this one support, now your eyes are focused. Your eyes are focused on the market coming back to this support and breaking this support at least once. Once you see market breaking support once, guys, this is when I start to look for continuation structures. I'm either looking for, and I don't know if you guys have heard me say it over and over, where I say level of structure, market breaks below that level of structure, comes back into, and then obviously retest that level of structure and then continues to the upside. That's exactly what I'm looking for. Once I see prices breaking back above this previous level of structure that we violated, I'm already starting to look for bullish continuation. If I find nice candlestick confirmation, then all and well, that's a good trade. Why? Because not all of these flags correct for a very long time. So all I call it is one line setup or two line setup. What a two line setup is if we already had this push to the downside, we obviously now have a new second support And what we're waiting for is for price to come back and violate the second support. And you will see that maybe if we had drawn a structure or whatever, that's our third touch. So sometimes, yes, the market does come to the third touch. Sometimes it doesn't come to the third touch. So what I look for is how is the market treating my highs and lows in this structure? After I have my impulsive move, all I'm waiting for is for that manipulation. For whoever bought first, you never ever want to be the first person to buy, because first people to buy or first people to sell are always stopped out unless it's the market makers themselves, who obviously have volume behind what they're doing. So we wait for that low to form for buyers to jump in. Once we see market violating and taking those stop losses out of anyone that had stop losses below the swing low, once we see that happening, then I start to look for my buyers after I see them taking people out once. If, for example, maybe price is coming back for a second time, then maybe I'm part of those that jumped in second and got stopped out or whatever the case is. But nonetheless, we will have now the added confluence of us having this trend line and having a nice multi-3-touch structure and greater probabilities, whatever the case is. So if you think about it, for continuation structures, a one-line entry is sort of, think about it like a risk entry. And once you see market violating two different support areas, think about it like a reduced risk entry. Just to answer Jose, although he's not here, I know one of you guys, someone also had that question. But otherwise, guys, I think it is 3 o'clock. I need to go and prepare for the live trading and for all of that other extra stuff. How are you guys for the session?
Nah, I learned a lot. So can we request another session for next
Yes,
week?
you can request another session, but what happens if you re-request? We prioritize people that haven't had a session first. And if there is still space within the week, then we add someone that has had a session before.
Oh, okay.
Yeah.
Thank you.
Most def,
I'm out.
Let there be peace, guys. Let there be peace in the streets, guys. Thanks so much, guys.
Sure. T.Mayne.
Enjoy the rest of your guys' day.
Sure.